Hi, what is the best investor visa option for you if you want to foot both in the UK and EU after Brexit? Before we answer that question, a brief introduction. I'm Tom Bradford. I'm a lawyer, and on this channel I help you identify the best visa and citizenship options to meet your objectives, whether they're focused on business, residency or investment. Now we're going to focus here on Ireland and what the Irish investor program has to offer. The key point that I want to convey is that under Ireland's program, it gives you a greater level of certainty in terms of future access to the UK than the rest of the residency programs and citizenship by investment programs. Now, in terms of the EU residency programs and the position now pre-Brexit, the UK isn't part of Schengen, and getting residency in Malta won't allow you to have free, visa-free travel to the UK. The position is the same with Cyprus and Portugal. Even if you get citizenship by investment in Malta or Cyprus, neither of those are necessarily going to get you access to the UK post-Brexit if there's a no deal between the UK and EU. Now, Ireland, on the other hand, does have a citizenship by investment. It doesn't have a citizenship by investment program, but it does have a residence by investment program, and it's part of the common travel area with the UK, which predates the membership of those countries of the EU. So the common travel area provides a mechanism for gaining access to the UK if you secure citizenship in Ireland. Now, the key point I want to make here is that under the Irish residency by investment program, there's a 5-year lead-in period, so it gives you a 5-year path to Irish citizenship. But in the meantime, there's a route for accessing the UK. So you still need a visa for accessing the UK while you're on the residency program in Ireland, but it's significantly easier to access the UK if you are on that program. And this links in with your options in terms of your business. If you have a business and you're setting up in the EU, and as I say, you want a foothold both in the UK and in the EU. So let me explain. Let's get into that in a bit more detail. In terms of the access to the UK through the common travel area, as I say, it predates membership of the European Union. We don't expect that to change. And as a resident of Ireland, there is that path for qualifying for citizenship after 5 years. Now, the fund I work with has a lot of experience both in helping individual investors come to Ireland, but also in helping business people and CEOs. One of the things you have to consider is the potential for establishing a holding company in Ireland that would then own your business interests in the UK as subsidiaries. Now, the potential benefits of this are twofold. First of all, the corporate tax rate in Ireland is the most favourable in Europe at 12.5%, or one of the most favourable in Europe. So routing your European revenues through the Irish holding company can be useful from a tax perspective. But also, if you are resident in Ireland and you have a business in Ireland and you have a subsidiary in the UK, your access to the UK company through an intra-company transfer visa is considerably easier. So, as I say, you have a path to citizenship after 5 years. But in the interim, if you're incorporating in both Ireland and the UK, you have a clear visa route in the UK through an intracompany transfer visa. I think also an important point is that from a practical perspective, having been granted a visa and residency under the Irish program, I think you represent a much lower immigration risk, and the threshold is much easier to pass for accessing the UK. Now, the other option that I've assisted clients with is simply coming in on a visitor visa, and there are various different subcategories within the visitor visa, one of which is an intra-company transfer. So the intra-company route to the UK, to bridge that gap before you qualify for Irish citizenship, is quite a neat solution. Let's go on to the next slide. So what I'm going to do is tell you a bit more about the Irish programme now. So if you bear with me, I'll just get on to the next slide. So there are 4 options available under the Irish Investor Programme. It's important to remember, as I say, that Ireland does not have a citizenship by investment programme. It has a residency by investment programme. Now, as for the 4 options, one is that you can make a charitable donation of €500,000. It's a gift, you don't get it back, it's gone. That's one option. The second option is to invest €2 million in a real estate investment trust, which is a publicly listed commercial real estate fund. And the third option is to invest in an enterprise. Now, in truth, the only enterprise that seems to be qualifying at the moment is the investment into the primary healthcare sector, so nursing homes and also social housing schemes. Now, the fourth option, the one I want to focus on, is an investment of €1 million into a central bank regulated investment fund. So investing €1 million or more into anything is a very significant step, and it's not something to be treated lightly, to be sure. Now, none of the options on the Irish programme are guarantees, since the Irish government took away the government bond, but the option and the programme that I do most work on is that which was designed to replace that. So in terms of the bond programme, that was completely guaranteed and the level of risk was minimised to almost zero. And the fund that I work with has designed a programme that was intended to plug the gap that was left when the government withdrew the bond programme. So the level of risk is designed to be very low. Let's have a look at the detail. So the first point is that the investment fund is approved by the Central Bank of Ireland. That means that the way they structure the business and the way they treat the investors' money, the way they spend on fees is all heavily governed and regulated. So that means when you put the €1 million into the fund, the full amount goes to work on the Irish economy. They don't take commission and fees out of your investment fund. So that's the first point. The second thing is that their investment strategy is not to speculate, to invest in equity in something that's yet to be built. So if you're investing in a nursing home facility in Ireland, for example, under the residency program, you would be investing in buying a site, for example, getting planning permission. It's all subject to building the property and to filling it. So you'd basically be investing into a business plan. Now, what the 1 million fund route does is different, and the fund I work with will not invest in something which has not already proven itself to be an operating, profitable business that has value. So what they do is, with the investors' money, it's pooled and it's lent to 4 to 5-star hotels in Ireland. Now, tourism is booming at the moment in Ireland because the tourism numbers are doing very well, but the challenge for the hotel sector is they can't secure enough capital from the banks to extend their hotels, to put more rooms on, to upgrade, because the Irish banking system is still nervous because of the financial crisis that happened 10 years ago now. The second point, or the next point, is that the money is lent as senior debt. Now that means that they will always take the deeds of the property of the relevant hotels. So if in terms of the risks and worst case scenarios, if the business doesn't repay the loan, then they will take ownership of the property and sell it to realise the value. So they'll never lend more than 70% of the value of the hotel. So there's always more value in the hotel than the amount of money that they've lent to it. They're also a mutualised fund, which means that if you invest in the fund, everyone else is invested in the fund, so no one investor is ever exclusively exposed to any one risk. The governance is also taken very seriously. In fact, one of the fund's former one of the fund's directors is the former Prime Minister of Ireland, so that ensures that standards are maintained and the reputation is kept intact. It ensures that they're very positive and have a very positive relationship with the Irish government on the overall programme. So the fund, and I think residency by investment options generally, they are never zero risk. But as I say, the fund is structured and designed in such a way as to replace the previous government bond scheme. Now, a consequence of that is that there's no return on the investment. You get your capital back after the 5 years, and the whole program, as I say, is designed to do that. But as I say, the key point is that it's designed to be an option that's of very minimal risk. Now, if you compare that with some of the other options under the Irish program, as I say, they're really their prospectuses will tell you that you will secure a return. Some of the returns that I've viewed are actually very low. For example, for the real estate investment trusts. And so it's not particularly significant, but there is nevertheless a return. So one of the things you'll have to consider when you're looking at investor visa options generally, and also options under the Irish program, is whether you are looking for a return, whether this is going to be dealt with exclusively commercially, or whether really you're just looking for a very low risk option. Now, for most of my clients, the fact that there's no return on investment, you simply get the capital back after 5 years, is not really an issue, because their priority is securing a safe route to residency and citizenship in Ireland. They're not really looking at this as a purely commercial endeavour, and they're thinking about education for their children in school and university in Ireland. So there's bigger things in play than making a lot of money out of the investment. It's really a question of parking the funds for a 5-year period. So having said that, let's look at the other points. Yeah, I did want to mention that investing in property is not an option under the Irish program. You can invest into a real estate investment trust. There are 3 of them listed on the Irish Stock Exchange. It's a €2 million investment. As I say, there is a small return, maybe 0.5% a year. The only other way to invest in property is by investing through the enterprise route. But this is typically where people are investing in the development of social housing. Now, on the upside, and to be fair to that route, those properties are generally underwritten by the government, because the government will lease those properties for 25 years in order to make them available to people who can't afford their own housing. But it's not the case that you can simply invest in property in Ireland and qualify under the residency scheme. You can do that, for example, in Portugal and Cyprus, subject to those rules, but that doesn't apply in Ireland. Now, in terms of assessing the risk profile, I'll just move to our next slide. Spoken about the real estate investment trust. Let's just talk about the country, because really, if you're applying for an investor visa in any country, you need to be satisfied, first of all, that you're investing in a country that's stable, that's growing, and that's vibrant. Now, the Irish economy is very stable. It has the fastest growing economy over the last 4 years, and it's on target to be the fastest growing economy in this year. It also received more foreign direct investment than any other country in Europe in recent years. So we will, as you will know, the likes of Facebook and Google are set up there, along with many other digital giants. So I think that's really the first layer of risk that you've got to consider when you're comparing different jurisdictions. It's the country itself. Now, beneath that, as I say, there's the various different options. Which option for you is going to involve the least risk? Just go back to that slide. And then within that, you've got to look how is the fund that you're working with structured and governed. And that really comes down, I think, to the people who are involved in the fund in terms of professional advisors and governance. And then you can draw your own conclusions about whether the fund is going to be appropriate for your needs or whether it's going to be the best choice for securing residence. What I will say is, if you decide to go ahead with the Irish €1 million residency program, for example, you would be in good company, because there are several applicants going through the program from different sectors, different walks of life. In all cases, there's broader scope for making introductions to opportunities in Ireland if we were to work together. Typically, my clients, as I say, will also want to send their children to school and university in Ireland, and you're thinking about the bigger picture. Now, as for the requirements, one is that you need to have a clean criminal record, as you would expect. The second is that you have a net worth of €2 million and the ability to invest the relevant amount of funds. So, as I say, for example, €1 million, or as I say, it may be €500,000 as a donation if you're looking at that route, or €2 million if you're going under the real estate investment option. Now, in terms of residency requirements, this is quite interesting, and I think that Ireland scores quite well. When you invest in the programme and you're approved by the Department of Justice, you effectively get permanent residence at the point of approval. It's checked after 2 years to make sure you haven't withdrawn your investments, but assuming they're still in place, this will then continue. And every 5 years thereafter, even after you have the full amount of capital returned to you, you retain that status. But the amount of time that you have to spend in Ireland to retain that is minimal. It can be as little as 1 day a year. So this is in significant contrast to the UK, where you have to spend half of the year there in the UK in order to secure indefinite leave to remain. Now, you do need to bear in mind that for citizenship, if your objective is to secure Irish citizenship in the short term, then you will need to spend significantly longer in Ireland. What many of my clients look to do is have their spouse or child based permanently in Ireland with a path to citizenship. And that gives them the freedom to engage in international business activities without being tied to the jurisdiction. So they can just visit for short amounts of time to maintain their residency. They won't necessarily qualify for citizenship after 5 years. It may be that they can structure their activities later to get citizenship in their own right. But in the meantime, their typically wife and children will be living in Ireland on a permanent basis, and will be on a path to secure citizenship, therefore, because they'll be physically present there after 5 years. So let's move on to the next point. Yeah, what I wanted to conclude with in terms of concluding remarks, if you'd like to work with me I'd be very pleased to speak with you. I have a free consultation service. And in terms of my contact details, I have an email address which I'll link below, together with WhatsApp. You can drop me a message on WhatsApp on the telephone number below. And you can also book a call directly with me. I'd be delighted to speak with you to discuss your options if you are considering a investor visa, and particularly if you're considering any of the options under the Irish programme, or indeed for the UK, or to gain access to the UK. Thanks very much for your time, and see you in the next video.